Hi everyone, this is a short screencast for Independent Colleges Dublin for F6 taxation and the mock exam for May 15. And this particular screencast covers question number 4, the VAT question. So within this we have an individual called John who's registered for VAT and operating on the cash receipts basis. That's certainly key, more of that a little bit later. In terms of his supplies, in other words, what he's selling, he's basically supplying a number of different items. Most of them are standard rated, but there is one that is exempt. That's the financial services. And that's a key point because essentially that makes this individual a partially exempt trader, which means that where we have unattributable VAT, in other words, input VAT that isn't attributable to either or any of the particular supplies in their own instance, then it has to be apportioned. And you will see below when we come to the requirements that they're asking us to apportion that input VAT in relation to turnover. Okay. Moving down the question, fairly standard setup within an F6 VAT question. We're given some information on sales and indeed on expenses. And key point here in relation to sales is that we're given details in relation to invoiced amounts and indeed cash amounts. Now, if he's on a cash receipts basis, then obviously what's relevant to him is what he receives in, not what he invoices. Again, more of that later. In terms of the expenses, typical setup here for F6 VAT question, where we're given a series of items. And certainly, as I've said within the classes, your F6 examiner is inclined to target input VAT. So you've really got to be aware of each of the little tricks in relation to the reclaim of VAT. And you'll note here that we're given an invoice date and indeed a date of payment. And given the fact that this individual is on the cash receipts basis, it may well be that those dates there are some tricks within those dates. Other than that, we've got some, a hotel expense here, and even given us a breakdown between accommodation and food. I wonder why they've done that. Maybe it's that one of those items is claimable for input VAT and one isn't. Okay. In terms of the requirements, as I've said, fairly straightforward. It's basically a VAT return. Note that we have to apportion the expenses relevant to turnover, taxable turnover versus total turnover, not cash. So albeit for the fact that he's on the cash receipts basis, they've asked us to apply any unattributable VAT based on taxable versus total turnover. Okay, so in terms of the answer, fairly straightforward setup as you would expect. Nice clear heading here, note, easy to follow. A very straightforward format. We've basically got a VAT return. We've got output VAT here. We've got input VAT here, and we're really trying to slot in the correct figures. And moving down the page, you'll see, just scanning it before we go through the detail, you'll see that they do what they asked us to do, or what they asked you to do indeed, is that they do give a net VAT payable. I've seen students do work within VAT questions, but not remember to actually provide a net payable figure to the marker, to the examiner. Okay, so make sure you do that. Now, in terms of the sales side, you'll remember what I said is that this individual is working on the basis of cash accounting or cash receipts basis. So really, any VAT that is due for the bi-monthly period is going to be based on money that has come in, so cash in, and that from the question that you will see is 70, so it's not the higher invoiced amount. In addition to that, where we have financial services receipts, that is exempt. And note that they do actually put it in, and you'll get a mark for putting in items that are not relevant. So do note that. You'll see that down in the expenses below, and I've mentioned that in classes as well. So that really takes care of the sales side. We're simply talking about VAT on the amount of cash in. We're going to exclude exempts, but we're going to make a note that we have done that and get that extra mark. In terms of the input VAT, one key trick here, and hopefully you remember it for next time, is just this hotel bill, and it's only the accommodation element that is reclaimable at 13.5%, giving us the £51 VAT. So it excludes the food element. Now, the stationery and the electricity, and I guess we would have just been able to, or had to have been able to, just fathom this out, is that those were items that weren't easily attributed to any of the sort of taxable versus exempt supplies. So we'll see in the workings down below that what we had to do in relation to those expenses is make sure that we apply them really based on the turnover, i.e. taxable turnover to non-taxable, or indeed total turnover. That's the ratio. So that's 81 and 9,000. So in essence, then we have a ratio of 90%. So in effect, what they're saying is that 90% of those elements can be included, okay, as input VAT. Excuse me. So what we'll see just down below here is for stationery, yeah, and for electricity, they simply take the VAT amounts as shown, and they take the proportion of 90%, because that's the proportion that relates to taxable supplies. We cannot reclaim anything that relates to exempt supplies. Note that if they hadn't said turnover, they could have said any other reasonable method, perhaps square footage or indeed number of employees, etc. But turnover is certainly, I would have thought, one of the most common ways. As long as it's reasonable, the revenue will be satisfied. Okay, so that's where we get the 4,500 and the 1,800 included above. Okay, so we have those three figures. Just one other point, just going back to this issue of the dates, just back to the question for a moment, you'll see that in relation to the electricity, we have an invoice date of 15th of December, and indeed a date of payment within the period for electricity of 18th of December. So that looks okay. In other words, the invoice date and the date of payment are in time. But you'll note that within the stationery, they have the invoice date in time, i.e. 20th of December, and the payment outside time. In other words, the 5th of January, so after the end of the period. Now, we can, in fact, include it because really for the cash receipts basis, one key thing to remember is that the expenses are always done on an invoice basis. So just because this item is not paid before the end of the bi-monthly period does not mean that it cannot be reclaimed. So watch for that trick, okay? So hence we have our stationary electricity figures here, and we're really applying our percentage of 90 to those to get the element that's relevant, 1035 and 243. Okay. Note also, as I said above, in relation to the receipt for financial services, that they've included the wages, even though we should all know that they're outside the scope, and just a half a mark just for doing that. So, you know, watch for items that are completely irrelevant for VAT purposes. Do include them, and you'll get yourself a half mark. And then the net difference, as it were, between the 16 and each of the reclaimed input VAT items. Okay. So that's really a summary. We've got some tutorial notes down below, but just really a reiteration of what I've said. Do read those at your leisure. And you know, in relation to the VAT question, note that, you know, when you're doing practice questions, just try and make a list of the common input tricks, because those are the ones that are going to recur again and again and again. Certainly more of those than there are on the sales side. Okay, many thanks.